Well, we just told you about retail sales numbers, but let's dig further into those numbers. We're joined now by Marty Weintraub. He's National Retail Leader at Deloitte Canada. Marty, as we told viewers, the number for November has come in stronger than expected and stronger than StatsCan itself guided to the last time it presented these numbers. We've seen a decline in retail sales activity of 0.1% in November from October. That's stronger than the decline of 0.5% that was expected. What's your take on the current retail environment here in Canada?
Yeah, we're in a challenging environment. I mean, I think you're disclosing and the government sharing some sales numbers that are now a couple months old, and I like to think that's sort of the past. And what does that mean for retail going forward? I can tell you, based on the conversations that we're having with our clients across the various retail sectors, there's definitely general concern that the consumer continues to be pinched. I mean, we have over 43% of Canadians that are, saying they're going to struggle to pay down their debt in the coming months. A third are saying we're not going to be able to afford, we're going to delay major purchases or big ticket purchases. So I think the headwinds, despite the numbers being a little more favorable than expected, I'm still fully expecting this to be a challenging year for most retailers.
What about the very low level of unemployment here in Canada? That one would think that is a positive setup for retail sales.
Yeah, it absolutely is. I mean, if you talk to some economists, even our economy team here, we'd say we're just entering a recession, and the next few quarters will be challenging, and we'll expect monetary policy to start easing towards the end of the year, and things will start kind of self-correcting. Inflation is already slowing down. So, there's a lot of mixed signals, right? So I think it's going to be a challenging year for retailers. And I think from an unemployment perspective, that's what's unique right now versus in previous economic downturns where unemployment levels are not where they are right now. So what we're going to see is Canadians are still working, so they will still continue to spend. They're just going to slow down that spend and probably protect their savings a little bit. And if they can't protect it, they'll be dipping into savings. And that's probably what's going to drive the consumer spending we will see in 2023.
We of course have seen the consumer staples providers do well during this inflationary period. The grocery stores come to mind as well. Is that a trend that you would expect to see continue?
Yeah, we'll continue to see food. Now, you just got to be careful because there's sales dollars, but a lot of times in food we talk about weight or tonnage because especially in an inflationary environment, it's a real tough to do sales comparisons. But yeah, for sure, when your household budget is confined, more of that household budget will go to food and consumables and necessities. So yes, that's true. However, from a grocery perspective, we do see shoppers shopping more stores, doing more deal hunting, increasing their purchase of private labels. So despite the fact that they'll do okay or better than discretionary categories, the consumer will still look for opportunities to optimize their spend on food.
Deloitte made the point in some recent material that it's written on this subject that 8 of 10 consumers in Canada are concerned about rising prices for everyday purchases. That's 80%. And you make the point as well that this is on par with surveys in the UK and Germany. How does Canadian sentiment and the experience of Canadian customers fit with what we're seeing in other developed countries, which are also grappling with inflation?
Yeah. In fact, we do that. You're referring to our consumer tracker. We do track in about 20 different countries, and it's pretty consistent. I mean, there's a little variation, obviously, from country to country, but in most of our tier 1 markets, like the ones you mentioned, it's the same concern. It might be a couple percentage points different here and there in the actual price rising, but at the end of the day, there's a lot of anxiety in the consumer's mind, which is what they vote with is unfortunately with their wallets. That's driven by the anxiety, and right now it's super high.
StatsCan also reporting that on a seasonally adjusted basis, retail e-commerce sales were down 2.7% in November. That's a sharper pullback than the headline number. Any thoughts on how this inflationary environment may affect e-commerce sales?
Yeah, actually, I think that's not as connected necessarily as you might think. I think the pullback in e-commerce absolutely does not surprise me or for most folks that are in retail. I mean, e-commerce had a massive turbo boost through the pandemic, as you probably heard and talked about for many, many months now. With the stores being fully open now and things resuming to normal, we're just seeing, people are coming back into stores, no surprise, and that's why the wallet share is coming back to that. In fact, we're seeing in terms of how retailers are choosing to invest their capital right now, a lot of capital is actually being redirected into the store. The store was starved of capital over the last couple of years because that capital went to e-com, right? Because that's where it had to go. And now that's simply reversing, and that's what's coming through the sales.
StatsCan, I'll tell viewers, StatsCan is also providing a preliminary estimate of retail sales in December. StatsCan says its initial estimate is for an increase in retail sales in December from November of 0.5%. StatsCan notes that owing to its early nature, this figure will be revised. It's an unofficial estimate. It was based on responses received from about a third of the companies surveyed. What about what about auto sales? That's a number that obviously skews the headline number. StatsCan reports a retail sales number with auto sales and without auto sales. What is your view of the trend in auto sales over the next few months?
Yeah, I think that falls into the big ticket category, right? So and it's a little confusing, right? Because we have a lot of supply chain challenges in auto specifically. And of course, that supply chain challenge may be coming down a little bit now, but now we're forced with higher interest rates. So there's a very close correlation between automotive purchases because a lot of those purchases are financed and therefore tied to interest rates. So I think the automotive sector, despite having some pent-up demand from the last couple of years, is going to have the added headwind now of it being less affordable. So again, when we look at what the consumer is telling us in our material, they're saying we're going to be delaying big ticket purchases, which includes autos. So I think we'll kind of see what happens actually in terms of sales over the next 2, 3, 4 months on the auto side, because it is a big ticket item and very sensitive to interest rates. So there's going to be headwinds there as well.
Great.